Hello, good morning, everyone. I believe we can all hear me. Good morning and happy new month to each and every one of us. We are welcome to the advanced strategy training for today, the fourth day of the month of February. If you can hear me, let me get our response in the chat box. Can we all hear me? Can we all hear me? Okay, so Mr. Joseph said good morning. Okay, thank you, Mr. Abraham, and you are welcome to the strategy session for today. Madam Victoria said, yes, you can hear me. But I'm currently looking at the number of participants we have now. The number is a bit small. So I would like to hold on a bit. Let's say for the next 2-3 minutes, if we'll be able to have more numbers join up to that which we have at this point in time, because the number is pretty small. And if we've started and they are joining us at a later time, that means they would have missed some portion of this strategy for today. So I'll give them like 2 or 3 minutes. So by 10:05 to say 10:07, we are going to be starting. But since you can hear me, if you have any question as we are waiting for others to join up with us, we can still ask the questions while we wait. Okay, so good morning once again. So at this time, we'll be starting with the session right away, because we've been able to wait for some few minutes for some other people to join us. And I think a few others have joined now, and others that will still be joining us will continue to join as we continue with the session for today. This is a very important strategy, very important in the sense that from my interaction with some of us that are part of this and those that have been at our physical training, I discovered that a large number of us are scalping the market, but we have not been able to get a very good strategy that will help us to scalp profitably. And that's why we are going to be looking together at this topic today, which would enable us to scalp the market, not just anyhow, but we are going to be able to scalp the market as a professional. That's what we are going to be looking at together. So I have two strategies I'm going to share with us today. And I believe as we continue to work on those strategies, it's going to make us more profitable in the market. And this is a fresh month. And today is a very good day in the sense that we're expecting a number of economic data, which is also going to create opportunity for a number of us to make as much as we desire. So it's as much as we desire today, we are going to make, because opportunities to make money is available, especially for those of us that trades the dollar, and then we also trade the loonie. There's opportunity for us to make as much as we desire in the market. So, and I believe each and every one of us are already set to get into the market by 2:30 p.m. today to take advantage of the opportunity that will be created at that time. So we'll be looking at scalping. Scalping is something we've been doing, but we have not been able to do it the right way. And even before I start, I would need to get our feedback on what our trading has been like, what has been the major challenge some of us have been facing, especially those of us that scalped the market a number of times. What has it been like scalping the market? Let's just quickly drop that in the chat box. I would be able to reach that, and then we'll be able to start once I'm able to get one or two feedbacks from us before we look at the strategy for scalping the market profitably today. Anyone who is willing to share the experience scalping the market? Okay, so Mr. Olubinga said money management. Okay. Money management in what sense, Mr. Olubinga? For Mr. Abraham, I think I will need to, maybe at the end of the session, I would need to have some discussion with you based on what you just dropped down, because I think we'll need to talk on, yes, we need to talk on this. Yes, at the end of the session, you might be able to reach out to me, or maybe once I'm done with the class, we just hold on, then we get to discuss. Okay, Madam Victoria said she doesn't know anything about it. Oh, you are welcome. Today we are going to know a lot about what scalping is all about, and then how we'll be able to make the best from scalping the market. Okay, okay. So Mr. Felix said, knowing the percentage of how much of my capital to expose in each trade. Basically, it is not too good for us to expose beyond 2 to 3% of our accounts at every point in time on trades. So you can just calculate about 2 to 3% of your account, and then that will give you an idea of what your margin should be looking like every point in time that you are having a running trade. So our margin tells us the percentage of the exposure we're having to the market at every point in time. So we start right now, and we are going to be starting with the definition. What is scalping? Because like Madam Victoria said, she doesn't know anything about scalping, even though she might have been using it in her trading, but it seems she doesn't know that that is the name of the method she has been using to trade. So what is scalping? So we are going to be looking at who a scalper is. A scalper is someone who looks to get out small profits multiple times a day. And by virtue of this definition, we will all discover that each and every one of us, I think about 70 to 80% of us being part of this meeting today, this is what we've been doing. We have been only looking at getting small profit from the market several times in a day, and that makes us a scalper. What helps one to be able to scalp the market very well is quick analysis of the market. And during the process of analyzing the market, you're also trying to get your entry and your exit levels. But I discovered that some of us are able to get the entries, but we do not consider the exit levels of our trade before we get into the trade. It is immediately after we have entered the trade, maybe we see the candle rushing up, we enter the trade, and then we start imagining how come that immediately I place the buy, price starts turning to the downside, or immediately I take a sell, price start jumping up, because we did not take note of the exits before we enter into the trade. And when we are talking about the exits, we'll be talking about the stop loss and then the take profit. So every trade we take, even if we are scalping the market, there should be an exit levels in mind even before we take such trades. So with small profit from each trade, when it adds up, it can generate a substantial amount over time. So scalping is a strategy that will help us to generate substantial amount over time, because each trade we are going to be taking will not give us all of those profits at a particular point in time, because it gives us small profits. When you enter your trade, maybe you are taking a 0.01 trade, immediately you see around 300, 400 naira, you exit your trade. You look for another opportunity, you see another 300 or 400 naira, you exit that trade. So if you're able to take about 10 to 20 trades on that particular day, that's about 300 times 10 or 20. At the end of the day, that 300 that looks small per trade becomes a bit substantial over time. But there's something we need to note here, especially as we are scalping the market. There is a need for us to be what? To be out quickly if we are not right. It is not good for us to have a target of about 300 naira or 400 naira, depending on our lot size, or even 3,000. And the trade after entering it is running to 500, 1,000, 3,000 naira against us. That means we have not considered the exit on the trade even before we take such trade. So it's important we work on the stop loss for each of the trades we'll be taking, and each of the strategy today also provides exits for us, especially if we are not right. Exit when we are right is usually very sweet, because your profit continues to grow and you'll be happy, you'll be smiling that, oh, thank God that I entered this trade. The rate at which this profit is growing is really marvelous and I'm really enjoying myself. Something that I used to spend about 3, 4 hours before I am able to eventually get to make it. I'm making it in 2, 3, 4, 5 minutes. So we are usually very happy when the trade is go in our direction, which means we are very right taking such trades. But when we are not right, the more the trade goes against, the way the person is going to be feeling will not really be the best, because the feelings of why did I even enter that trade at that particular point in time? Why didn't I check A, B, or C before I take that trade? So that kind of feeling is not what should continue to be a part of our experience in the market going forward. So there are two basic strategies I said I'm going to be sharing with us, and on each of the strategies we'll be looking at how to sight buy opportunities, how to sight sell opportunities, how to identify regions of our exits, where should we have our stop loss, where should we also get to put our take profit. And the first one talks about the trend scalping using the moving average. Looking at these candlesticks here, all of these candle patterns I'm seeing on my screen here, which kind of trend is this showing to us? Where is price going from this candle patterns on this screen? Where is price going? Who will help us? Who will help us? Where is price going? Okay, someone is raising up his hands, but I think you can just use the chat box. Okay, so I think I have some comments in the chat box. Yes, uptrend, it is going up. Great, uptrend, that's fine. So all of us got that. Upwards, uptrend, up. Great, that's fine. Yes, truly uptrend, because price here is gradually waving to the upside. So in case of a move like this, how do I sight my entries? How do I sight my exits? Scalping the market. And okay, so someone has just dropped one. Yes, up from Mr. Goodness too. Precisely, that is it. Up. Price is moving to the upside. So the first strategy is the moving average strategy for scalping. So on this particular strategy, the first step is for us to load our anchor chart. And where do we have our anchor chart? Our anchor chart is on the 1 hour time frame. So on the 1 hour time frame, any instrument you trade, because this particular strategy works on any instruments, but there are certain things you also need to consider in picking the instruments to trade. And I will be looking at that at the end of the strategy. I have some tips for us on instruments to consider for scalping, because some instruments might not be very good for us to scalp on them due to some factors we'll be considering at a later time in this session. So once we load our anchor charts, what is the essence of the anchor charts? I asked us from the previous slide that where is price generally going according to the chart I displayed to us, and all of us got it right. We said uptrend, up. Beautiful. That is the essence of the anchor chart. The anchor chart will help us to identify the trend on the instrument, because whenever we are trading in line of the trend, we tend to get it right most of the time rather than trading against the trend. That's the essence of going and checking our anchor chart for clear direction of the market. Where is price going? So I can also consider going in the same direction with price. So what will help us to identify this trend will be utilizing two moving averages. And the two moving averages are the 8 exponential moving average and the 21 exponential moving average. So how do we get to add these moving averages to our chart? I'm going to start with that. So I take a move now to my MT4. So I share the screen. I move straight to the MT4. I believe you can all see my screen. Yes. So this is D30, for example. If I trade the index, but let me use one of the currencies, preferably Euro USD. When I get to those points, I will be sharing with us towards the end of the session. We'll get to know why I prefer a currency pair like Euro USD compared to something or an instrument like D30, even though it works on D30. But let's consider the currency, Euro USD. So I move to Euro USD. This is Euro USD on the hourly time frame. I add my indicators. This is the indicator list. I click on the indicator list. I move to trend, because moving average is a trend indicator. It's an indicator that tells me the general or the overall direction in the market. So I go to moving average. I start with, okay, so we have period 8 and 21. And for period 8, because period 8 is the fast moving average, is faster than the 21, I'm going to take the color as green to follow based on the pattern we've been using when it comes to rally. We've been using the green and red candlesticks. So I also want to have a moving average that works according to the kind of colors of my candles. So it will be easier for me to recognize, oh, based on green, I'm seeing the green moving average above the red. It tells me this, or I'm seeing this and that. It also gets to tell me this. So I had this moving average. So I changed my period. If it is not currently 8, I change it to 8. My method as exponential, and I apply to close. I move to the style and the color is green. Then I click OK. Once I tap on OK, I can see the moving average. This one is the 8 exponential moving average. And the second I'm going to add is the 21. So I move to the same indicator list. So I click on the indicator list. I still go back to trend. I click on moving average. And I change the period this time to 21. It's still exponential, apply to close. And the color this time is now red. So I change this to red and I tap OK. So my anchor chart gives me the trend in the market. And how will I know the trend? I have two moving averages, green and the red. Currently on my anchor chart, which is on hourly time frame, I'm seeing the green trading far above the red. So this is definitely telling me that at this point in time on Euro USD, I should be looking forward to take opportunities, to take buy opportunities on this instrument. So buy opportunities alone currently on H1. That's what the anchor chart is showing to me. So let's take a look back at the slide. So we've added the two moving averages to our charts at this time. So next step. Yes, so we said the color 8 exponential moving average should be green and 21 exponential moving average should be red. And that's what I've just done. There is something we also need to note here. He said whenever 8 exponential moving average is below the 21 exponential moving average, that means the red color is above the green. Whenever the red is above the green, we will be looking for sell trades only. Sell trades only. That means we will not buy whenever the red is above the green. Let me show that to us on the charts. Getting back to the charts, I scroll back in time on the charts. I have that here. This is the 21 exponential moving average. You can see it displayed on the screen. And this is the 8 exponential moving average. So at this point, the 21, which is the red in color, is above the green. So during this phase, I will only consider opportunities to sell only, no buy. I will not take a buy trade at this point. And we can see what happened. That during that period, price was trading to the downside. And whenever the 8 is above the 21, that is the green colored exponential moving average is above the red colored exponential moving average, I will only consider opportunities to buy. Like here, you could see it, price was gradually waving to the upside. So I take a move back to the slide. So when price moves above the EMA, when 8 EMA is below the 21, means that there is no setup. What does that mean? Whenever you have the 8 trading below the 21, it means the red is above the green. And whenever the red is above the green, I should only consider sell opportunities. And price should not be trading above the moving averages because the moving averages should be acting as a resistance to price and not a support. But when price is now trading outside of the moving averages, at that point, the moving average will be acting as a support to price, which is contrary to the direction I should be considering based on the setup the moving average is given to me. So whenever you have the red above the green, price should not be the red above the green, price should not be trading above the moving average. And the other side too, when price moves below the EMA, when 8 is above 21, also means there is no trade setup. In this case, you have the green. trading above the red. The green is trading above the red, and price should gradually be waving to the upside, and the moving average should be acting as a support to price. So if I move to charts again, though I don't think we have a current instance of that. Yeah. So here we have the 8 trading above the 21. And most of the time, price was trading above the moving average. But at this point, if you check this region, we could see price trading below the moving average. So if, as at the time, I was trying to look for opportunities to scalp the market, and green was still above the red, and I am seeing price trade below the moving average this way, I will not take any trade because there is no trade set up at that point in time. That's what that point is trying to explain to us. Then I move to the second point. So after confirming the direction of the trend on H1 time frame, which we have just done now, like on Euro USD, we are seeing the green trading above the red, saying the trend is currently up, buy opportunities alone. I've done that. We now move to what? The 5-minute time frame, because we are going to be taking trades based on this strategy on 5-minute time frame. 5-minute time frame. So let me quickly move back to the charts, and then I change the time frame to 5 minutes, M5, this way. So the chart loads, and then I'm back to M5. Let's continue. For buy, which is what we currently have on Euro USD, he said, analyze buy trades on the 5-minute chart. Consider the two moving averages on the 5-minute chart, which is what I've just done now. As price moves on, we look out for a trigger, because price will continue to move. But it is a trigger that will tell us this is the right time for us to take a trade. And how do we know the trigger for us to take a trade? Any bar that touches what? The 8 exponential moving average becomes what? The trigger bar. That is, any candle that comes back to touch the green exponential moving average, which is our 8 EMA, becomes a trigger bar for us. And it is from there we'll be able to start looking for where to put our trade or take our trade on the instrument. So after getting the trigger bar, I'll see showed us that we now need to count back 5 candles previous to the trigger bar. So before that candle that touches on the 8 exponential moving average, I need to count 5 candle backward. The essence of doing that is for me to be able to get the eye. The candle with the highest eye of all of those 5 candles will be my potential point to take a buy trade. But I'm not just going to rush into the buy trade because, okay, let's continue. The highest bar will be our entry. Yeah, that's the candle with the highest eye. But I'm going to utilize a buy stop 3 pips above this particular candle. So once I'm able to identify the candle with the highest bar, I will get the high of that particular candle and add 3 pips to it. So 3 pips away from the high of the highest candle gives me a point for my buy stop. And my stop loss will be placed 3 pips below the trigger bar. So what is this saying? Let me now move to Euro USD. Let me move back to the chart. I hope we are getting what I'm showing to us. Hey, Mr. Sunday said, I hope you will repeat this process for mobile phone users. It's still basically the same thing. Once we can add moving average to our charts, and we can utilize the crosshair on either on our mobile phones or on our desktop, we'll be able to get it done the way I'm doing it on my system at this point in time. So let me quickly take a move now to the chart and show us what this is telling us to do. So I move back to the MT4. So currently, when we checked our anchor chart, our anchor chart showed us that the green should be above the red. That's buy opportunities. But currently on the 5-minute time frame, I hope we can see the moving average. On the 5-minute time frame, the red is currently above the green. this is contrary to what I saw on the H1 time frame. So I will refrain from taking any trade at this point in time because this does not correlate with what is happening on the higher time frame, which happens to be the H1. But let's look at what has happened in the past while we're still having the green trading above the red. So at this point, we're having the green trading above the red, and the first trigger bar we got at this point was this particular candle. You could see this particular candle. Okay, this was the first one. This particular candle came back to touch the green exponential moving average. So this was our trigger bar. It triggered that at this point, one can start looking for opportunities to buy. So immediately I got this trigger bar, I will count 5 candles backward. This is candle 1, candle 2, candle 3, candle 4, and candle 5. But out of these 5 candles, it is this particular candle that was able to reach the highest high of all of them. So this is the candle that will provide me with my entry point, and the price currently displayed around the high of that candle is about 1.14438. So I will take note of that price. Sorry for the break in transmission. It was due to network issues at this end, but I've been able to fix it now. I believe we can hear me, but where was I? As at the time, we couldn't hear me, so I can start from there. Yes, break in transmission. It was a break in transmission. I'm very, very sorry for that. So who can help us? Where were we as at the time? Okay, on the 5-minute chart. Okay, 5 candles back. Thank you, Mr. Oladimeji. You identified the trigger bar. Okay, thank you, Madam Victoria. Great. So we've just identified the trigger bar, which happened to this particular candle. We could see the green exponential moving average trading above the red exponential moving average. And at this time, price came back to touch the 8th exponential moving average, which happened to be the green colored candle. So immediately this happened, it triggered the opportunity for us to look for buy trades. Then I count 5 candles backward. This is the first after the trigger bar, the second, the third, the fourth, and the fifth. Out of the 5 candles, this happened to have the highest high of them all. So this particular one is the one I would get the price of the high. And the price of the high of that particular candle happens to be around 1.14437. Although I can get a more accurate value by using this tool, the data window. So with the data window, I just place my crosshair on that particular candle and it gives me the high. The high, according to this, is 1.14438. So I got a price that was pretty close to the correct high, which this is going to give to me. So 1.14438, or I can just do this and then I get that 1.14438. You can see the price towards the right side of the screen, the price axis. So I take note of that price. Let me close the chart, the data window, and then get my notepad and write the price. My share screen, I'm coming. So we can also get to see my notepad with it. Okay, so this is my notepad. I take note of the price, and that was 1 point. I might need to check again. 1.14438. So 1.14438. That's the highest level any of the 5 previous candles got to. That was the high. It now says add 3 pips to this. 3 pips is the same thing as 30 points. So I add 3 pips to this particular price. So 1.14438 plus 30 gives me 1.14468. So this is going to be my buy stop price level. Buy stop is going to be at 1.14468. 1.14468. And the strategy also says I need to get the low of that particular candle that gave me the entry, which was this candle. This is the candle that gave us, that had the highest high. I'm also going to get the price of the low. The price of the low happened to be at around 1.14383. So I take note of that price, 1.14383. Then this time minus 30. Minus 30, this is a plus for my buy stop. So if I deduct 30 from this price, I would arrive at, let me start from this side. So I have 3. 8 minus 3 is going to give me 5. And then every other thing remain constant. That's 143 and then 1 point. So this is my stop loss. So I will try to fix this now to the charts, and we get to see if price eventually go to these price levels, either our stop loss or what our potential TP is going to look like. And from here, I have my buy stop, I have my stop loss. I can get the difference between where my buy stop is going to be triggered to my stop loss, and my TP should be at least nothing less than 1.5 times my stop loss. 1.5 times my stop loss. That is my TP. So my TP will be based on the size of my stop loss, because I should be able to make at least 1.5 times whatever I am risking on that trade. So let's try to fix this price on the chart now. So I have my buy stop at 1.14438. So I try to locate 1.14438 with this 1.14438. So it's around this price level, 38. Yes, this is 1.14438. That was a trigger bar that gave us the high. 1.14468 will be our buy stop entry. 1.14468. 1.14468. Let me try to adjust this to 1.14468. 446868868. Just one more. 60. Oh, I moved it above. 68. Oh, just slightly. Still going to 69. I think I will leave it. Okay, so I've been able to get it. So at this point, this is where our buy stop would have been triggered, and our stop loss would be at 1.14353. 1.14353. 1.14353. 53. That's why we have our stop loss. 5353. Here, this is a stop loss. So the difference between here and here is the value of my stop loss, and I can easily get to calculate that with my crosshair. So I have it from here to here. So my stop loss is 11.6 pips. You have 2. These 2 represent the number of candles covered. This 116 is in points, and this 1.14353 shows me the price where I have placed the crosshair. So the one in the middle is the point, and the one in the middle shows 116 points. That is 11.6 pips. And what would 1.5 of that look like? So 1.5 of 11.6, you can use let me quickly use my calculator to get that. 11.6 times 1.5. So I have an idea of the value of my TP on the trade, and we check, did price eventually get to our TP according to this setup? So 11.5 times 1.5 gives me 17.25 pips. So I just get 17.25 from my entry, 17.25 from my entry, which happens to be somewhere here. Yes. So around here, my trade would have been closed because price made a move 1.5 times the value of my stop loss. So if I had used this particular setup on this instrument as at this time, I would have made profit up to 17.5 pips on the trade. So do you have any question on what I've just shown to us now? Any question? Please, what is the difference between the buy stop and the TP? The buy stop would turn to a buy trade at a later time. You know, when price came to trigger this, our moving average, which was our trigger candle, price was here, but we've calculated our buy stop to be around this price. So immediately price started pushing up, this particular candle triggers the buy. When this triggered the buy, price still came down a bit. Then eventually we could see price waving back until it gets to our TP. So the buy stop is a potential buy or a buy above current market price. A pending buy above current market price is the buy stop, while our TP is our take profit. So where the trade or where we are going to exit the trade is our TP. Positively in profit, where the trade is going to close in profit is our TP on the setup. Any question on this? Another question? Does that mean the orders is pending order? Precisely, Mr. Ye. Yes. Oh, yes. It's pending order. We are going to be using pending orders for this, but we must get a trigger bar before we know where we are going to place our pending order. And more than 70% of the time, once the setup is this way, the trade is going to get to our TP. More than 70% of the time, if we are able to wait until there is a proper setup, that is, there is a trigger bar on the green moving average, count 5 candles backward, get the high of the 5 candles, add 3 pips to the high, use that price as your buy stop price level, get 3 pips below that trigger candle too, the trigger for your trade. 3 pips below the low also is going to be our stop loss. So in case price doesn't go up, we will only risk a tiny fraction of our account. You don't need to be waiting on trade for so many days. Since we are scalping the market, we are wrong very fast, we are out. We are right very fast, we've made money. That is what scalping is all about. And this is going to really help us once we start utilizing this. Okay, can one be able to set up the trade? Yes, we should be able to do that. It's on 5 minutes. It's on 5-minute time frame. So the more we practice this, the more we get used to it. Instead of just looking at price, the price is rushing up now, let me rush with it. No, we do this, we get a proper setup to catch price, and we'll be able to make more using this particular strategy to catch price. Either it's going up or it's going down. What if I use 6 and 18? Well, if that is the one you desire to use, but this 20 and 21 and 8 is what I have been using, and it has been working. So you can also try the 6 and 18 and see what the result is going to look like. That's for Mr. Timothy. Add this to empty for phone users. For phone users, okay, I will show us quickly. Let me just quickly check through the comment section. What if the trade is picked earlier? The trade should not be at that buy stop as at the time you'll be entering your trade. So if there is a trigger bar and you were not there to get the high and set your buy stop, wait for another trigger bar. Wait for another trigger bar. And then you can take a trade based on that trigger bar. So Madam Victoria says, explain the trigger bar again. Yes, I can do that. Here, according to our anchor chart, that's on H1, we saw that the green exponential moving average was above the red, which tells me that I have to wait for the 5-minute time frame to also be in the same direction. The green must be above the red on the 5-minute time frame. And when I opened my chart, assuming as at the time I opened my chart, it was here, red was still above green, I would have to wait. I was waiting. Then eventually the green crossed the red and the green was now trading above the red. But then all of the candles being formed, none came back to touch the green exponential moving average, which happened to be the 8 EMA. So until this particular red candle came, touched the exponential moving average, immediately it touches it, not when the candle has closed. Immediately it touches it. I count 5 candles backward. 1, 2, 3, 4, 5. I get the high of those 5 candles, which happen to be on this particular candle. Then immediately I had 3 pips to the high of this candle. That 3 pips took me to 1.14468. And from the low too, I deduct 3 pips from this low. That gave me my stop loss. So I put in my stop loss. I initiate a buy stop here and I fix my stop loss here. I get the difference between this, my buy stop and my stop loss. I multiply whatever pip I get in the difference here by 1.5, and that gave me around 17.25 thereabouts. So I calculate 17.25 from my entry. So my target profit on this trade should be at least 1.5 times whatever I am risking. So with 1.5 times, it gives me around 17.25, which fell somewhere around this zone. That is where I'm going to fix my TP, and I allow price to move. If price does not go back up, if I see price going back down, trading below this moving average, I delete my pending order. No, it is a pending order. It is not triggered immediately. So if immediately price comes below the moving average, I delete it. It means that setup at that time is no longer valid. I wait for further setups. But whenever the setup is valid and I am able to set it the way we have just done now, we would see ourselves making money more than 70% of the time, which is really, really beautiful if we're able to follow this setup to trade. So we can, let me see, check some other comments. Can you go back to the slide again so we can get the parameters? Yes, I will still show us the slide one more time. And then the appropriate lot size. The appropriate lot size should be based on our capital. Yes, our capital is paramount when it comes to trading. If your capital is small and you want to use big lots, add more money to your account. When you have better capital, you can trade better and enjoy trading with strategies like this one. But if your capital is small, that means you can only use 0.01. There's no going back on that. Can it be applied to trending and ranging market or only trending market? Only trending market. If the market is ranging, we do not use this. It is only when the market is trending. We want to trade in the direction of the trend. Just trending markets, Mr. Goodness. So for those of us using phones that asked, how do we get to set the moving average on our phones? So 3 pips is 30 points. 3 pips is 30 points. So for buys, we add to our buy stop, we deduct. Oh, Mr. Joshua said the audio is going off and on. Is that what all of us are experiencing, or is it just from Mr. Joshua? Let me get our feedback. Is the audio going off and on, or is it consistent? Okay, Mr. Simota said audio is fine. Okay, so that means, Mr. Joshua, you might need to check the audio settings of your device, or maybe the internet connectivity at your hand is not very strong. I think you might check that so you can also get to hear us consistently the way others are currently doing. So for phones, be applied to gold, any instrument. It works on any instrument, but I will still give us some tips for consideration on instruments to scalp on for better results. There are some tips I'm still going to share with us at the end of this session to make this strategy more effective for us. Madam Chidima said the audio is breaking. It seems it's only Madam Chidima and who says so too. The other person then, Mr. Joshua, yes, it seems it's the 2 persons that said, oh, Mr. Joshua said the account officer just posted the link now. The recorded version is going to be made available, let's say by next week, and it will be on rally.academy. So by then, those of us that have missed the earlier parts of it would be able to catch up with the so that means you need to register on rally.academy to have access to, if you have not, you might need to register on rally.academy to be able to have access to the recorded version of this session. So do with candlestick patterns, can be any pattern precisely. We are not trading candle patterns. All we are waiting for is to get a trigger bar. Once there is a trigger bar, then our setup is valid. Immediately we can get a trigger bar. So we are not trading candle pattern this time around. Any shape, it can be of any shape. Once it touches the green exponential moving average, we just follow the procedure, but price must not go below the moving average. Immediately price now trades below the two moving averages, please delete your pending order immediately and wait for other setups. Yes, because price trading below the two moving averages means that the setup has been invalidated and we need to wait for other setup. For phones, for those of us using phones, how do we get to add moving average to our phones and then use the settings appropriately? First is that once you're on your chart, this is a chart of a particular instrument as it were now. I go to the chart of the instrument I want to trade. I click on this F. Can we see this F? This F is what allows us to add indicators to our chart. So I tap there and it shows me main chart. Normally, every of the MT4 should come with one moving average. There should be a moving average displayed on your MT4. So with that moving average, once you click on this F, you get to see the moving average. You tap on that moving average and you adjust the settings according to what I have just given to us. So we are using the 21 and the 8 exponential moving average. For the 21, we had to change the color to red. And for the 8, we have to change the color to green. So that's how we get to add the moving average to our chart on the phone. Okay, and President requested that you need to go back to the slide. So we take notes of some of those parameters. So the first thing we need to take note when it comes to the parameter is the moving averages we'll be using. And it is the 8 EMA. The 8 EMA, we attach the color green. And the 21 EMA, we attach the color red. 8 EMA, we attach the color green. 21, we attach the color red. We move to the H1 time frame to be able to get the direction or the trend on the instruments. So the H1 time frame happens to be our anchor chart, is the one that will tell us the direction on the instrument. So immediately we are able to get the direction on the H1, or that's the 1 hour time frame. We now move back to the 5-minute time frame and do according to what I have just done on the 5-minute time frame a couple of minutes ago. So this is how to analyze the buy trade setup on the 5-minute chart. You look at the two moving averages, that's the 8 and 21. Then you wait for a trigger. That trigger happens when any of the bar touches the 8 exponential moving average, which happens to be the green moving average. So immediately there is a trigger at the 8 exponential moving average. You count 5 candles backward. You look for the swing eye. That's the candle with the ISI. You add 3 pips to that particular candle to be able to get your buy stop position. You deduct 3 pips from the low of that candle. And the difference between the 3 pips above and 3 pips below will give you the size of your stop loss. So your TP should be at least 1.5 times whatever your stop loss size is looking like. That's for the buy setup. Let's look at the sell. Sell trade on the 5-minute chart. Still first, there should be a pullback to the 8 exponential moving average from below our trigger bar. So price during these trade opportunities should be trading below the moving average. Price should be traded below the moving average. That is, the moving average should be acting as a resistance to price. Count 5 previous candles to figure the recent low. So you get the low and then get 3 pips below the lowest bar to place your sell stop. Stop loss should be placed 3 pips above the trigger bar. So 3 pips above the trigger bar is going to be our stop loss. 3 pips below the highest or the lowest bar is going to be our sell stop on a sell trade. How do I add the second moving average? So once you add the first one, you go back, you tap on the F, you see main chart, and in front of the main chart, there is F plus. So you tap on the F plus and you go to trend, you see moving average. So the second one, you adjust appropriately. Settings of the MA, is it exponential? Yes, sir. It is exponential. On laptop, yes. Yeah, I'm using laptop. And I did the setup not too long ago on the system. So for the sell, we start with our anchor chart, which is on H1. I think, okay. So H1 Euro USD doesn't give us something like that. H1 Euro USD shows us price is still moving to the upside because the green, which is the 8 exponential moving average, is still trading above the red. So for those of us that missed how I added these moving averages to my chart earlier, we might need to watch now because I'm going to do the same thing to one other instrument, which are going to use to identify sell setups in the market. So I think this, which instrument might be coming down? Okay, so this one basically for most of the time has been trading downside. That's USD card until earlier this morning when it started waving to the upside. So the first thing is H1, my anchor charts. This is indicator list. This is where I get to add indicators to my chart. So I tap on the indicator list. I go to trend, pick moving average. My period is 21, exponential, apply to close, color is red. So I click OK. So that adds the red moving average to my chart. I return back to the indicator list. I move to trend. I pick moving average and adjust accordingly 8, and then this one is going to be green. Then I click OK. Oh, so currently the green is above the red here. But to hasten this process, I'm going to save these settings or this template. How do I get to save it on system? I come to templates, I click template, I move to save template, and I can call the name, let's say 5MA or EMA scalping strategy, for example. So I can remember easily anytime I want to recall this particular template, scalping strategy, then I save the settings. So I can easily recall it on several other instruments. So I go to this, I check 5 minutes, scalp strategy, where is it? EMA, okay, EMA scalping strategy. So I recall, it's added automatically. I go to US30, I check 5 minutes, scalping. So I'm trying to look for one that will be giving us sell opportunities. Okay, EMA scalping strategy. Yes. So on US30 at this time, according to my anchor chart, this is the anchor chart of US30. And on the anchor chart of US30, I'm seeing the red trading above the green, sell opportunities. So let me quickly, some of us have dropped a lot of questions in the chat box. I think I need to go and check it. Oh, we can't see what, oh, I didn't share the screen. Sorry. Oh, sorry. I thought I was sharing the screen. We can't see the chat. Oh, sorry. I did not share the screen. Oh, your chat, sir. It's not showing. Okay, yeah. So that means I have to take this again. I thought I was sharing my screen earlier. I'll have to take that part all over. Yes. Madam Victoria, yes, that's what I'm going to do now. I'll share this. I'll start all over. Let me remove the templates. Go back to normal I can do stick charts. Then I want to add the moving average. This time I move to my indicator list. This is the indicator list. I tap on it. I go to trend. I pick moving average. I'm using 8 and 21. 8 is going to be green, exponential close. So I already have the setup. Agreed. I click OK for this. Then I return back to the indicator list one more time. I move to trend. I pick moving average. I change the period to 21 and the color here to red. And okay, because every other settings remain constant. So this is my anchor chart, the H1 time frame. The green previously was trading above the red, but currently on US30, I'm seeing the red trading above the green, saying that I can be considering opportunities to sell on US30 at this point in time. So after configuring this, I want to save this template. I move to templates. I click templates. I go to save templates. and I type in the name I want to use. I saved it with a name the other time. Let me just look for that name. I called it EMA Scalping Strategy. So we can also decide to use that same name for it. And I click Save. So immediately I save that. It says I have it here. Replace it. I've saved it. So this will make it easier for me to recall this particular strategy on any instrument I want to trade. So easily I can recall it, check and see if there's any trade setup, quickly take advantage of that opportunity and then make money from it. So I go to 5-minute time frame now. Since I'm seeing the red above the green, red is above the green, and on my 5-minute chart too, the same thing is currently happening. The red moving average, which is the 21 exponential moving average, is currently trading above the green, saying we should be looking for opportunities to sell. And this was we had a number of candles that touched this green one, and this was the first to touch the green exponential moving average. It happened to be the 8 exponential moving average. So we count 5 candles backward. 1, 2, 3, 4, 5. And out of the 5, this particular candle went lowest. So gave us a swing low out of the 5 candles. So this is the point I'm going to reference. This is my reference point for a sell stop. So I add 3 pips to this reference price, which is at 35047. So I just add 30 to this, and that will give me 35077. So at 35077, that's why I would have put my sell stop, 35077, which is around which price? 77. No, 350. That would not be 77. That would be minus 30. That would be 17. 35017. 35017. Yes, 17. 35017, which is somewhere, where is 17? Here. Somewhere here. It is at this point that this particular instrument would have triggered our sell trade if we have used this particular strategy earlier. And we've counted 5 candles backward. We have gotten our trigger bar, and then we've gotten the swing low. We've added 30. We've deducted 30 from the swing low. This would have been our sell stop entry. So from this particular trigger bar, I calculate 3 pips above it. 3 pips above this trigger bar is going to look like how many? What price? This 351112, 35112 plus 30. 35112 plus 30. 35112 plus 30 is going to give me 351. 5. What would that be? 351 4 42, 35142, 35142. That's where I'm going to have my stop loss, 35142, which is going to be somewhere around here, 35142, somewhere around here. Yeah. So 35142, where is it? 42. Yes. 35142. This is going to be my stop loss. So what's the difference between my TP and my entry, which is my sell stop point, and my stop loss? This is about 125. Yeah, 125, which is about 12 pips. So I multiply this 12 by 1.5. 12 by 1.5 should be giving me something in the region of 30, thereabout. So I move from my entry and calculate that 30 from this entry. So 30 from entry, which is about 300, is going to be my TP on this particular trade setup. This is for index. So it looks a bit cumbersome on the index compared to the currency. So let me check any currency that might give us a similar setup. So we get to do it on a currency. Okay, so I think GU is coming down. Let me check if that is going to give us a proper setup. Moving average scalping. Where is it? Yeah, EMA scalping. Okay, this is fine. So GU currently on the anchor charts has the red trading above the green. So the red exponential moving average is trading above the green. So this would be easier for us to follow up with compared to the index. So since the anchor chart is telling me to start looking for opportunities to sell, I move to 5 minutes, M5. M5. And on M5 at this time, I've been having the red trading above the green for a while. So I've missed a lot of triggers along the line. But as price is trading here now, let's imagine that price comes back to touch this green moving average. No, this one has not happened yet. We are just envisaging that it might happen. So if that happens, that price trades up and touches this green exponential moving average. Immediately it touches it, I will calculate I will count 5 candles from this particular candle, which happens to be the trigger bar. That's 1, 2, 3, 4, 5. And we get the swing low of those 5 candles. And the swing low happened to be around this low. Yeah, but this one has not touched the moving average yet. I'm just trying to use this as an example, but let me use the one that touched the moving average then. Instead of using this, since this is not currently moving towards the moving average. So we add this. At this point, these two went outside of the moving average. And one of the conditions, when I was reading the condition to us, is that when you have the green trading above the red, price should not trade above the moving average. Price should not trade above the moving average. So at this point, we have to hold on and wait and see what price is going to do. Later on, we're able to get price getting rejected from the green moving average because the green moving average is the trigger moving average for us. So immediately we got this trigger bar, we count 5 candles backward. 1, 2, 3, 4, 5. And the swing low of all of the 5 candles happen to be somewhere here. So in this case, we will not have been able to use a pending order for this. So this one is invalid immediately. Wait for another trigger. So let me see when we got the next trigger. The next trigger was here and 5 candles before 1, 2, 3, 4, 5. We couldn't get a low lower than this low too. So that one too is not valid. Then we got another trigger here. This another trigger. So 5 candles, 1, 2, 3, 4, 5. All of those candles are still higher than the trigger bar. But this particular one now would be or create a good setup for us because price is currently moving and hopefully price is going to push as high as around this moving average. That gives us a very good trigger. A good trigger to start looking for opportunities to sell once again. And if that happens, let's watch a bit and see if it continues to push up and then touches the green exponential moving. I know this one is happening live and it's going to be a good one to use as an example. For those of us that feel we might not be able to set it as fast as possible, we can, since we are always on our charts trading with this scalping method. That means that in either case, either buy or sell trade, it is when the bar touches the 8 moving average. Yes, it is the 8 exponential moving average that acts as our trigger moving average for this particular strategy. And we don't consider the 21 precisely. Yes, we don't consider the 21 in this case. Please, the moving averages, do we apply them to close? Close. Yes, to close. We apply them to close. Thank you, sir. Okay. Yes. So let's still run with that assumption that this green continues to go up and touches this. 5 from here, 1, 2, 3, 4, 5. And the swing low happens to be here. So no, this one has not happened yet. So this is going to be a perfect example. So we calculate from that swing low. Hope we can see my notepad. Can we see my notepad? Can we see my notepad? Or I need to share it again. Okay, we can see my notepad. Okay, thank you. Okay, so the price there happened to be at 1.354. 35486. So I take down the price, that's the low. And from that price, I need to deduct 30 from it, which is 3 pips. So 30 from this minus 30. So 6 minus 0, 6, 8 minus 3, that gives me 5. And then this is 4, this is 5, this is 3, and then 1 point. So 1.35456 is going to be my sell stop. That's provided any of these candles get to touch this exponential moving average, though they have not. But we are expecting, or we're anticipating that one of them is going to do that, since this is still pushing up. Hopefully to get there, and then this particular entry will become valid, and we can use it for a sell stop on this particular trade. So with this, I now identify my trigger candle once again, and this happened to be our trigger candle. This was a candle that says, no, this is the one we are anticipating is going to be our trigger candle. It has not triggered yet, but we're anticipating it's going to be our trigger candle. So if it happens eventually, and it gets to touch price, say at 1.35615, I will only add I will add 30 to that, to the eye of that particular trigger candle. So to the trigger candle, I had 30 to it, 30 to the eye of the trigger candle. Trigger high plus 30. So assuming price, the eye of that particular candle that gets to the moving average happens to be around, say, 1.36515. Assumption, because price is yet to get there, but I hope it will get there, so we can have a very perfect example since this is happening right away. So let's still continue as we wait and see what price is going to do. So 30 plus this, so plus 30. So this is going to give us 5 plus 0, 5, 3 plus 1, 4, and then we have 5, we have 6, yeah, then we have 3, and then 1 point. So 1.36545 is going to be our stop loss for this setup, provided price eventually gets to be triggered from the moving average. So this is our stop loss. So if I mark out these two price levels now, so I've already marked out, okay, just the low. I've not marked out the sell stop yet. So let's say the sell stop is at 1.35456, 35456, 35456, 35456, 35456, 5456, 35456. Okay, 5. Why is 56? 35456, 5258, 60. Okay, so let's assume this is 1.35456. I couldn't get 35456 precisely, but I got 1.35458. So this is my sell stop, and this is the particular candle I'm expecting will be my trigger bar, but it has not yet given us a trigger to sell. But assuming it touches the moving average and becomes our trigger bar, I add 3 pips to that particular, the high of that candle. But currently this is the high of this candle, and I assume it is at 1.35615 because it has not touched the moving average. It's still an assumption. So 1.35615 is the price I took as the price where the trigger bar touches the moving average. So from this 1.35615, I add 30 pips, 30 points to it, which happens to be 3 pips, and that gave me 1.36545. So 1.36545, 1.36545 is around here. 45, 45. Okay, I didn't get 45 come precisely, but I got 44. Okay, so I got 44. The distance between my stop loss and my entry sell, which is here, is about 17 pips or 18 pips. So my TP from here should be 18 times 1.5 minimum. 18 times 1.5. So I should still be, once this price, once this particular candle or any of these candles going up is able to touch this moving average now, we'll be able to get a perfect price we'll use. And then we can even use this as an example, which all of us can place. And then we get to see how price eventually turns out using this particular strategy at this point in time. Is it clear? Are we able to get it? Let me see. So in either case, we are looking to set up either buy stop or sell stop and nothing more. Yes, sir. And if one is there as at that time, do we do an instant execution? Yes, you can also do an instant execution if you can mark it out as I have just shown now. So as I have marked it out now, let's say price goes back to touch this trigger bar, which is the green moving average. As it is coming down, immediately it crosses here. I click sell immediately. So I might not use a sell stop. I can also decide to go with an instant execution at that point, which I have marked out already. The immediately price gets there, I take a sell trade. And once price continues to go down, I continue to make money on that trade. It's not important, sir. Why do? The 21 EMA is important, sir. Yes, because it tells us the trend. We are using the 2 to get the trend. But when it comes to getting the trigger, it is the 8 that gives us the trigger for the trade. Yes, but the 21 is also very important. You need it to know the trend of the instrument. Okay, for Mr. James? Yeah, your request is already noted. Yeah, Mr. James, your request is noted. And one of these days, we'll be looking at it in one of the advanced strategy session meeting. Yeah, yes, Mr. Izu too. Yes, it's noted. It's noted. We'll work on it. And for Mr. Izu, you gave us two suggestions. Yes, it's something we are seriously working on. And very, very soon, we are going to see it play out. Yes, very, very soon. It's going to play out pretty soon. Can we do practical trade? Yes, that's why I'm even trying to wait and see if price is going to get to the 21 exponential moving, the 8 exponential moving average. But price seems not to want to get there. So that's why I'm trying to wait on it and trying to go through the comment section while waiting for price to touch the trigger exponential moving average. Then our setup becomes valid. We quickly set that up. I can even share the price with us that we can use to take that trade. Can we check other currency? Yeah, because there's still another strategy we want to look at. This is a part of the strategy. There are 2 scalping strategies I want to share with us. So this is the A part. And I hope the B part will not take a long time like this A. Can we repeat this class? The recorded version will be available on rally.academy, so we can register on rally.academy so we have access to the recorded session of this particular class that invalidates the trade. For a red trading above the green, price must not trade above the moving average. You know, currently red moving average is trading above the red, above the green. You see the red? You see the green. The green is below the red. So price should not be trading here. Price should always trade below. And whenever we are going to get a trigger, price should come from here to go to the moving average to give us a trigger point. And from there, we calculate our entries, where our stop loss is going to be, where we have our sell stop in case of this particular setup. And that's all we need to do. You are welcome. Please help me with the parameters for your MA. That's 21 and 8. The 21 is red and the 8 is green. Both EMA apply to close. So it seems price does not just want to touch. For Mr. David, I think I've explained it earlier, but I think since you are still asking, you can send a mail to feedback@rally.academy, and a guide will be made available to you so that we can quickly look at the second strategy for scalping the market. Okay, so the second strategy. Yes, so he said, let's go. Yes, let's go. Hope we can see my screen. Yes, we are moving straight away to second strategy now. That's the first. The second one says RSI with moving average. So this time we'll be using the RSI with the moving average. And how do we go about this one? So I've already stated all of the conditions on this particular screen. So hopefully this won't take us a lot of time and we'll be able to finish as fast as possible. First thing, we set our RSI at 50. You know, conventionally, you used to have the overbought and the oversold on your RSI, maybe 70-30 or 80-20, but we'll need to change that settings. That's the first thing. We need to have our RSI set permanently at 50. And this time, the EMA we'll be utilizing is the 200 exponential moving average. That's the exponential moving average, still apply to close. Every other settings remain constant. The only thing changing is the period. And this time around, we don't need any color. Any color you like for the EMA is okay. The difference in this one and the last one we checked is that our trades will now take place on the 1 minute time frame. We'll be trading on the 1 minute time frame this time around. So what gives us a bullish setup according to this strategy? First, price trading above the 200 exponential moving average. That's the first condition. Price must trade above the 200 exponential moving average. Second condition, RSI must be trading above the 50 mark. RSI trading above the 50 mark. And the trigger are bullish engulfing candles. So we will only trade bullish engulfing candles around either above in case of the bullish setup. Bullish engulfing candles above the moving average. Every time we see a bullish engulfing candles above the moving average, it's a good setup for us to take a buy. What of the stop loss? Our stop loss will be below the low. And in case the bullish engulfing happens to be the recent low, our stop loss is going to be exactly below the engulfing, depending on the formation on the chart at that time. Because sometimes you might have another low that is lower than the engulfing. In that case, you use that low. But if the engulfing happens to be the low, then the engulfing up is going to be the stop loss for our trade. And in this case, our TP should be what? 2 times the size of our stop loss. 2 times the size of our stop loss. That's for the TP, either the buy or the sell. What of the bearish setup? Price trading below the 50 exponential moving average. Sorry for that. So it's 200 exponential moving average, not 50. So the RSI should trade below the 50 mark. Here, the trigger for the bearish setup is bearish engulfing candles. Bearish engulfing candles. So stop loss above the bearish engulfing candle. Or in case you have another low or another high higher than the bearish engulfing candle, that high is going to be our stop loss. And TP should be at least 2 times the stop loss. TP should be at least 2 times the stop loss. So I'm going to start this by showing it to us. But before I do that, do you have any question on what this looks like before we look at what is the setup is going to look like on the charts? Any question on what I'm currently displaying on the screen? Not yet, okay? Or Mr. Folusho, any other person? Yes, Madam Uju, the meeting is recorded and we should be able to have access to it from next week. Is it just 1 minute time frame? Yes, sir. It is strictly 1 minute time frame. Strictly 1 minute time frame. Okay, so let's quickly do the setup now. Okay, one question, Mr. Ladimeji. Let me have your question. Okay, Mr. Gunaya, you are welcome. Nice having you today. Mr. Ladimeji, you said you have a question. Let's quickly have your question. How do I save the moving average for frequent use? You just go to templates and save template. Templates, then save template. So you'll be able to save it. You use the name you like to use for the moving average to get to save the other template. Yeah, so we can move. Yeah, so move straight to the chart now. So we are using RSI, which is a stochastic indicator with a trend indicator. So this one combines the trend with the stochastic indicator. So I move straight to my charts. Yeah, eventually on the GBP USD, we've gotten a trigger back. And we see the last green candle got to the 8 exponential moving average. There's a trigger bar now on GBP USD. So we count 5 candles backward. So sorry for going back here, but because there's a setup, so we can check. 5 candles backward, 1, 2, 3, 4, 5. This still happens to be the low. That's the swing low of the 5 candles. And this will still be our sell stop. So we can all take a sell stop now on GBP USD at this price. So sell stop at 1.35458. We have gotten a trigger bar now on GBP USD. So sell stop now at 1.35456, 1.35456. And we will still use this stop loss because our gauge eventually happened. No, I was expecting that price should touch the exponential moving average around 1.36515, and it is around that price that it eventually got to touch the exponential moving average. So the guess was almost at that same price. So it was great. So we can also use this price as our stop loss. 1.36545 is going to be our stop loss. So what's the difference between the two? Let's quickly take that sell stop before price gets there. So sell stop at 1.35456. I hope you can see my notepad. So you can see the price to use for that sell stop. 1.35456 is going to be our sell stop price. Our stop loss is going to be at 1.36545. What of our TP? We said TP should be at least 2 times your stop loss. So first, I record my stop loss. My stop loss happens to be 18, let's just say 19 pips because it's 18.9. So 19 pips. 19 pips times 2 is going to be 38. 38. Is it 19? Yeah. So that's going to be 38 pips. Is going to be our target. So 38 pips from our buy stop entry. So 38 pips. 38, 38, 38, 38, 38, 38. That's 38. So 38 is around 1.35067. 1.35067 is going to be our TP. 1.350, is it 67? Yeah, 1.35067 is going to be our TP on the trade. So this is the stop loss. And this is our sell stop price. So let's quickly put up this, and then we can start the other strategy. But since this is coming up now right away, so it's better we try it out. Let's see how it's going to play out. And then once it works, then we can say that this particular strategy is one we should start using. But if price is now able to go above this moving average, we are going to delete this trade. If price, as it's going up now, so if it's able to go above this moving average, we delete this setup. But if it doesn't, we still leave it. Oh, we can't see my screen. Oh, let me share it. I thought we were seeing it. Can't see the price I was sharing. So can we see it now? So can we now? Okay. So I think I have some questions, some comments. Yes, we can. Okay. So let's work with that, and then we continue. So sell stop at 1.35456, stop loss at 1.36545, and our TP at 1.35067. I guess we should be done now. Are we? Yes, sir. GBPUSD is the same thing as the one with plus. The one with plus is for those of us with standard account, which is the one each and every one of us should be on. Because standard account gives us the opportunity to pay very, very low spread. Yeah. So Mr. Nee said it's done. Is there any other person that is done? Let me just get one or two other confirmation. Then we can continue. Any other person that is done? Yes, done. Okay. So I've seen two done. Yes, done. Okay. So let's now start with this second one. So the second strategy we will be using, so I need to move away from this, go to high candlesticks, proper candlesticks, and the time frame says M1, 1 minute, true scalper. Yes, 1 minute time frame. I add my RSI indicator list. I move to oscillators, and then I see my relative strength index. So I've already made the adjustments, but let me reset it so I can show us what it looks like conventionally. Let me save it and take it all over. So I come to, yes, this is what the this is the normal settings of the RSI. You should have either 70 and 30, or you can adjust to maybe 80 and 20 to give you the overbought and the oversold region. But this time we are not going to be using the RSI that way. It's a different way entirely. So I go back to the RSI this time, and then I make the adjustment, relative strength index. So I edit this 30 to 50, and then I delete this. Delete. So, okay, so I can change this color to a very deep color, so I will see it clearly, and I can increase the size of this, and then, okay, so this is the first one. Let me delete this first one, RSI 21, should be this, so I delete this, so I'm only left with one now. Great. So when it says trading below the 50, you can see it here, that this is trading below the 50. And at this time, the RSI is exactly at 50 on GBP/USD. So it's currently exactly at 50. But here it was below, and here it was above. So for the bullish, RSI should be trading above the 50. For the bearish, it should be trading below the 50 mark. Then I had my moving average, trend, moving average, period 200, period 200. Yeah, so I can see it clearly now. Can we see it? So I move this way. And our trigger bar this time are bearish engulfings. Bearish engulfing candles only. So immediately price came below. From here, I start looking for bearish engulfing. And the first bearish engulfing I'm seeing was here. Can we see it? Let me try to zoom it a bit. Oh, hope I've not moved too away. Where is it again? Oh. That's the challenge with zooming. Let me just zoom it very well. So that's, yeah. Since I didn't see the other one, so I've seen another one. This is a trigger, bearish engulfing. Can we see the bearish engulfing? This is a bearish engulfing. So immediately this appeared. I will now check my RSI. At this time, where is my RSI trading? Below the 50 mark. Beautiful. I take a sell trade once I got this. So I take a sell at the close of this bearish engulfing, somewhere here. My stop loss is going to be above the high, which is here. If I measure this, stop loss to entry should be around just 3 pips. So my TP should be at least 6 pips. And this gave me 7 pips minimum. So you can see it. 7 pips would have been made, even much more than that, because price still continue to go down. But the strategy says target 2 times your stop loss. Since the stop loss is 3 pips, my TP should be at least 7 pips based on this one. So stop loss very tight. And did price touch our stop loss? No. Since I got a bearish engulfing, price was trading below the exponential moving average. You can see it. This is the moving average. This is price trading below it. RSI is trading below the 50 mark. Sell. First sell. Yeah. We continue to check. This is another one, bearish engulfing. Can we see it? I think it engulfed it, or it did not. Let me check very well. So I'll be sure it engulfed it. I think so. I think it engulfed it. I think so. Or let's look for another one, since one is not so sure that it engulfed it. Another one. Okay, this is another one. This is another bearish engulfing. So immediately this particular one closes, I will take my sell. But in this case, price went back to touch our stop loss, which is fine, but it won't linger for long before we are stopped out if you are wrong. So our stop loss would have been here and would have taken the trade somewhere here. Immediately this one closes, which is, let's say, somewhere here, was when we took the trade. So price only gave us how many pips? Less than a pip before it turned. And the stop loss is just how many pips? Just 4 pips. So it's very, very small. If it doesn't go according to plan, it takes one out very, very early without risking so much on the trade. Let's still see if we're able to get another bearish engulfing, since price is still trading below the moving average. Another one? None. No other one, since those ones have identified. Okay, so I have some questions in the chat box. No, in this case, no pending order. This one is instant execution because you are watching. You are always on your, anytime you want to use this particular strategy, you should be before your chart. Before your chart, you are checking. Is it valid? You take your trade immediately. You adjust your stop loss. You adjust your TP immediately. Yeah, Mr. Semota said he prefers this strategy. It's fine. Anyone that works for us. But it's important we practice it on our own again. So we'll be able to pick the one that works for us better and will be giving us a better result on the instrument we are trading. Do you have any question now before we look at, I think we have only checked the sell, so we can also check the buy. What the buy is going to look like. Any question on this? Any question? Okay, it seems we have none. So I move to when, okay, so it seems a question just dropped. Can we use it on 15 minutes or 30 minutes? No, sir, we cannot. Just on 1 minute time frame, we are scalping. This is a perfect scalping time frame. Very tight stop loss, as close as possible TP. Yeah. Okay, come again on the RSI settings, just the 50 mark. We remove every other division on the RSI and only have the 50 mark only. So we move to oscillators. Let me delete this RSI. It seems that's where some of us are still having some issues. Let me delete this outrightly. And then I had oscillators, relative strength index. So reset, yes. So this is what the oscillator RSI should look like. And what I need is just the 50 mark. So I can edit this 30 to 50. Immediately I edit that, I delete this 70, delete. So I am only left with that 50. I change the color, preferably to a deep color, so I can see it clearly. And then I make this line a bit thicker, so I can also get to see it very clearly. Then I click OK. So automatically it gets added. Price trading below the 50 mark, sell. And price trading above the 50 mark, buy. So you buy when price is trading above the 50 mark and price is also trading, when the RSI is trading above the 50 mark and price is trading above the 200 exponential moving average. You sell when price is trading below the 200 exponential moving average and the RSI is trading below the 50 mark. So that's the setup or the settings for this particular strategy. Yes, the recording will be available on Rally.Academy. So we have access to it on the website. Let's say next week. So for buy now, let me look for when price was trading above the exponential moving average. So at this time, price is still trading below. So still below the 200 exponential moving average. Still the 200. Okay, so here price was trading above. We've gotten a couple of above here. Let me just try to zoom and zoom carefully so I don't move it too far away, and then I miss out on some of the moves. Yeah, this wasn't, because this one went lower, so this one didn't give us a bullish engulfing, but it was almost a bullish engulfing, but not one. Okay, but here we got a bullish engulfing. But at this time, even though price was still trading above the moving average, the RSI was not trading above the 50 mark at that time. So we will not have taken that trade, so which is okay. Let me look for another one. Okay, someone is asking, how do we identify the bullish and bearish engulfing? When I see one now, I will zoom it properly so we can see what the bullish looks like and what the bearish engulfing look like. Yeah, it will be available by next week, hopefully. Bullish engulfing. Oh, I didn't even see that. Some of us have been asking. Yeah, the recorded version will be available. Yeah, on Rally Academy. We have not been getting the past 3 recordings. Okay, but I can tell you this one will be available by next week. Yeah, by next week we'll have it. Okay, so I think I've checked all of the settings. Let me see if I can quickly see a bullish engulfing, and then I show us what a bearish engulfing looks like. Because that is the trigger. If we cannot identify it, then we'll not be able to use this particular strategy effectively. So the identification is very, very important. What did I press on? Oh, maybe I should move to another instrument since I don't know what I pressed. So I changed the settings. I can do stick this USD card. Okay, I can do stick. Then I had the RSI from oscillators. 50 is there already, so every setting is okay. So then the 200 exponential moving average, trend, moving average, 200. Perfect. Okay, yeah. So currently, USD card is trading above the 200 exponential moving average on the hourly time, on the 1 hour time frame. And for most of the time now, we've seen the RSI also trading above the 50 mark. It's only once in a while along this move that the RSI has traded below the 50 mark. So along this move, let's try to see if there is any bullish engulfing that can show to us and will help us to identify bullish engulfings on bullish positions like what you are currently having on USD card at this point in time. Yeah, so I've seen one now. Let me try to zoom. Hope I've not missed it. Okay. Yeah, so can we see this particular zone? Insert, shapes, rectangle. I want to mark it out. Can we see this that I just marked in yellow? You would notice that there was a red candle before this green candle. Then this green candle covered entirely the body of this red candle. This particular green candle is called a bullish engulfing. So it covers or engulfs a red candle. That's a bullish engulfing. And here we have a bearish engulfing, though this is not valid because price is trading above the 200 moving average. But it still shows us a bearish engulfing, a red candle covering entirely the body of a green candle. That's the bearish engulfing. So did we note the difference now? For those of us that ask about the difference of the two, do we note the difference now? For the bullish engulfing, the green candles cover the red. For the bearish engulfing, the red candle covers the green. So in this case now, We should have a bullish engulfing like we had here. Price should be trading above the 200 exponential moving average, which is what we currently have. And the RSI should be trading above the 50 mark, which is what we currently have. So immediately this particular candle closes, I will take a buy. So I've taken a buy. My stop loss, because the bullish engulfing happens to be the recent low. Yeah, the lowest of the recent one, because this other low, I'm not sure it's as low as this, or they're around the same level. Are they? Yeah, they're almost at the same level. So I take this bullish engulfing as my stop loss. In this case, is the most recent of all of the lows. And from my trigger or my entry, I will calculate what my TP is going to look like. This is my stop loss to my entry. And that gives me how many pips? Just 2 pips. So my TP is going to be about 4 pips minimum. But how many did price eventually give to us? This is about 5 pips from our entry. So that's it for that. And even if one decides not to still exit the trade, price might give much more than that. But it's good for us to just target about 2 times our stop loss. That's about 10 pips. Price eventually gave us almost 10 pips. That's 96 points. That's virtually 10 pips, risking less than 2 pips as our stop loss. So see a bullish engulfing, price is trading above the 200 exponential moving average, RSI is trading above the 50 mark. You take your buy, you put your stop loss. If the bullish engulfing happens to be the most recent low, you put your stop loss below the bullish engulfing. But if there is another low very close to around the region where you have the bullish engulfing, you put your stop loss below that particular low. And you target 2 times the size of your stop loss, 2 times the size of your stop loss as your TP on this particular setup or on this particular strategy. Okay, so any question now? So I think we've looked at both sides, the bullish side, and then we have also looked at the bearish side earlier. Any question? Is this what we can start using immediately? Can we start using this strategy immediately to scalp the market to get better results for ourselves? Will we? Yeah, for Mr. Destiny, you say you are just joining us. This video will be available, say next week. So you should be able to have access to it on rally.academy. So you can take your time to watch it and then get to understand the strategy that we've discussed today. Okay, so it seems there is no question. Let me quickly share the tips with us. Tips that will help us to get the best from scalping. 4 steps to become a better scalper. 4 steps to become a better scalper. The first thing, because when you are using this kind of strategy, or when you are scalping the market, there will be a lot of opportunity coming up at every point in time. Every time you open your chart, there is opportunity. There's opportunity. There's opportunity. There's opportunity. But one of the steps says you do not need to take every trade. Do not take every trade. Only take trades that you will be able to manage and your account can support. So you should not have a small account. And because you are seeing 20 trade opportunities, you are taking those 20 trades at the same time. You don't do that because your account cannot support it. Only take the few ones that your account can support. Even though we have seen from the strategy that there is a very good level, which is going to be very considerate. And that's where we are going to put our stop loss, very considerate, very tight stop loss on the strategy. That's the first step. Take only the ones you can support. Take few trades out of the opportunities that will be coming up in the market. The second step says use appropriate lot size based on your capital. Do not just increase your lot size inappropriately. Somebody with 100K should not be trading with a lot size of 0.2, 0.1. That is too big for that account size. If you want to operate at 0.2, 0.1, move your account to like 600, 700K or even a million. So you can operate better at that particular lot size. So your lot size should determine the kind, your capital should determine the kind of lot size you'll be using. The third step, know when to stop. Very important. Scalping gives a lot of opportunity and one might get tired and lose focus. So after you've taken a number of trades, stop. Do something else. Don't continue to trade until you are tired. When you become tired, you might likely lose focus and you will not see some things that you ought to see normally because the mind is tired or even the body is tired. Do not trade until you are tired. Take few opportunities. Stop when you are, before you get tired, after you've taken some opportunities from the market, relax. And then at a later time, you can come back to check the chart because scalping will always give you opportunity to trade. There will always be opportunity, but you should not try to take all of the opportunities because it will become overwhelming and one will get tired. And the last step says focus on instruments with low spread. So this would naturally mean that this method will be better for someone that trades the currencies, especially the major currencies, because generally the major currencies have very low spread. Because if you look at our targets, you see that some of the targets are just less than 10 pips, about 8, 10, 15 sometimes pips. If your spread is beyond those range, at that point, the person will not have even covered spread as at the time the trade would have gotten to the expected target level. So trade instruments with low spread with this strategy. And if we do that, we'll see ourselves making profits sufficiently from this scalping strategy. Okay, so I think I have some questions once again. So I'm having some questions on the chat box. What are the instruments with low spread? Euro USD is number one. So Euro USD will be a good instrument to consider for this strategy. USD JPY is another one. USD CAD is another one. GBP USD is also low. Euro Pound is also low. USD CHF is also low. Those major currencies generally have very low spread outside of maybe NZD USD. So any other one, we can use this strategy to trade them. So Mr. Destiny, the strategy will be available on Rally.Academy by next week. Let's just wait, and then we have access to it. We can watch over and over again. Then we can apply whatever we have learned to our trading, and this is going to help our results because that is the most important thing. Our results should be better than the way it is at this point in time. Okay, so Mr. Emmanuel said I should give us a list of some of those instruments with cheap spread. So we have instruments like this. Hope we can see my screen, the notepad. That's a first. Next. Mr. Bunaya still asks, how do we calculate pips precisely? If you take the values of price you are seeing outrightly, so let me just go to this USD card. The current price of USD card, for example, now is, hope we can still see my notepad. Let me take out this. It's about 1.27252. That's the current price of USD card as at the time I took it, because you might check now and price is no longer there. And at a later time, USD card might still get to say 1.27160. So what is the point difference between these two price levels? Which one is bigger? I think this is bigger than this, so I can subtract this from this. So with subtraction, if I subtract this, 2 minus 0 gives me 2. 5 minus 6 is not sufficient, so I have to borrow 1 to add to that 5, making it 15. 15 minus 6 gives me 9. And since I borrowed 1 from here, this remains 1. 1 minus 1 is 0, so every other thing remains 0. So this outright difference between these two price levels is in points. So this gives me 92 points. And to get the PIP, I divide this point by 10. That's 92 divided by 10. This gives me how many? 9.2 pips. So this is how we get to calculate pips precisely for Mr. Mugunaya. So another question, because I think we've come to the end of the session today, but has the GBP-USD trade, has it been triggered? Has it been triggered yet? GBP. Let me go back to check the charts. Where's GBP-USD? No. Okay. Yeah. So let's still continue to. You have not answered my question. Oh, what's the question, Mr. Gbenga? Maybe I didn't. Maybe I missed the question while trying to scroll through. Mr. Gbenga, what was the question? But we've come to the end of the session for today. By next week, latest around this time next week, latest, the video should be available on rally.academy, and we should be able to have access to it, watch it over and over, and then get to understand how to use the strategy, and then start using it to be more effective in our trading. So I wish us all the very best in trading. So I look forward to getting a positive feedback from the NFP today, because I'm expecting all of us listening to make money from the NFP and the other key fundamentals that is to be released by 2:30 p.m. today, which is just less than 2 hours, 30 minutes, just about 2 hours, 24 minutes. So by 2 hours, 20 minutes from now, we should be on our system waiting for the chart, for the data to be released. And once it comes out, whatever direction price is pushing to, as at the time the data comes out, let's take advantage of the opportunity and make some very cool money for ourselves today to enjoy the weekend. You know, it's important. I said, do we do pending order for the first strategy? Yes, pending order for the first, because we are using buy stop and sell stop for the first one. And the second one is instant, because we have to be consistently on our charts to see bullish engulfing or bearish engulfing to get to take our trade. So thank you very much, Mr. Michael, too. I appreciate your presence at the session for today. So I look forward to seeing each and every one of us at other strategy sessions that we'll still be having, which is going to help us to become better traders. Well, for Mr. Adam, he said, when is the right time to trade fundamental? It depends on the strategy you want to use. Some strategies to trade immediately the data is being released. The other one is that you can set pending orders ahead of the fundamental release. And the last one is that you can wait until the move of the fundamental is exhausted and you trade against whatever move happened due to the fundamental. So if you want to use the last method, which is the third one, after the fundamentals impact is off the market, maybe it's led to a buy in the market. Most often than not, if price has bought due to a fundamental event, at the end of the influence of that event in the market, price tends to come back to the downside. So you can take advantage of that retracement that comes after the release of some of those fundamentals. For strategy one, the one-page slide for strategy one, okay. But I think it's going to be available. Please, I need a quick enlightenment. Oh, Mr. Emmanuel, you say, why is pending order kicking you out? Which of the pending order is kicking you out? And is it too close to where price was trading? Because that's another thing you need to also consider. Price should not be too close, or your pending order should not be too close to where price is trading at that point in time. If it's too close, you get rejected sometimes, and sometimes it quickly triggers it, and since it was too close, price will retrace and it might get to touch your stop loss too fast too. So you need to check that, are you able to put your pending orders at the right place? Is it not too close to where price is trading? And is there a news as at the time you're also trying to set those pending order? Because you should not be setting pending order like 2 minutes to the release of a major news. Like today, if you want to use pending order to trade the data to be released today, you should be done latest 5 minutes to the news. Latest 5 minutes to the release of the data, you should be done. You should have set the orders, just waiting for price to get to those levels you've set to use on fundamentals. Well, we are not using candles to trade fundamentals. We are only waiting for the data to tell us we are to buy or we are to sell. Then we do it accordingly. So thank you very much, everyone. Have a great day. Make money from NFP today and enjoy your weekend. Thank you.